Alrighty, so today's webinar is going to be based on strategies. Now, um, trading strategies. I'm a very technical trader, and so all of my strategies are based on technical analysis. And so I'm not a fundamental trader. I really don't go into any sort of, what a company really is potentially gonna do or what their PE is or anything like that. I'm basically a technical trader, so it's all for me about what the candles are doing, what the moving averages are doing, what the indicators are telling me, and if I can see a projected move based on Fibonacci projections or retracement or something like that, then that's the way that I go about trading. So my strategy itself is based on technical analysis, and for me, my basic strategy is an 8-13 strategy. So my moving averages are, it's a 8 EMA and a 13 EMA, and I have also on my chart the 50 EMA and the 200 SMA. So the reason why they're all EMAs is because I feel that they have the best move for me. It's the best moving averages that I've gotten used to using, and I'm very comfortable with using them, and they've provided me with a lot of profitable trades, and so I continue to work with them because they work for me. I've added the 200 SMA recently onto the chart because I feel like there's opportunities when you go through different charts. You'll see that there are parts on some of these charts that the 200 SMA does come into effect, and obviously I'll probably have to go through a few charts to actually see that. But like, take for example on TSRO, at this instance there was a nice double bottom there, and the chart did hold that 200 SMA, which is the blue line. And I mean, for the rest of it, I mean, the chart really haven't done anything crazy off of it, but there was a nice bounce off of it there. And so if there's one thing that can help you out at any point, um, in your trading day or in your trading career, if there's one single thing that can make a difference, you should have it there. And so it's not clutter if it's not in your way. I don't feel like having moving averages on there is any clutter. I can kind of see right through that. Like, I really don't even see, when I'm looking at a chart, I don't even see anything that clouds my view from seeing the candlesticks or the moving averages. I don't know, it's kind of like a tunnel vision, I guess. After a while of doing it, I can flip through any chart, and I can see them as clean as day. And so when you're newer at it, you feel maybe like it's a lot of things to have on your screen at the same time, but it really doesn't bother me at all. And if I'm looking at any particular chart at any time of the day, I can see so many things at one time. I mean, I can see the volume, I can see where the price is at as compared to where the moving averages are at. I can see where the MACD is at, the stochastics are at. And so there's a lot of things that I'm seeing visually at any one point in the day. Like, take for instance, if you take this cut view of this chart here. Okay, say like you take this cut view of this chart here. There's so many things in this space at the same time that's going on. This is Scottrade Elite, and so there's so many things going on at the same time. I mean, like, you can see that the chart's holding a 200 SMA. That's okay. I can see that the moving averages are starting to curl back up. Okay, that's in the same cutout. I also know that this time of the day is 10:30, and so 10:30 is the time of the day that I'm looking at for reversals. So I also see that the chart's oversold. MACDs are flattening out. And there's a lot of things, like even in this little cutout, that you can see in a second. And so for me, my strategy is basically, it's pretty simple. I feel like there's a lot of people out there looking for that holy grail, for that fantastic strategy to really put them over the top or have that edge over somebody else or over the market. And that's really, it's so unrealistic sometimes, because there isn't a holy grail of moving average, or there isn't a holy grail of a strategy in general. The real essence comes down to whichever strategy that you've decided that you want to work on, and we'll go over a few of them, the simple ones. Whichever strategy that you decide that you want to work on, you really have to be disciplined with it. You have to be structured with it. You have to be systematic in that process, and in any conditions, in any market conditions, you have to really say that, hey, this is what I want to do, and I'll play it, consecutively. Even if it fails on me and it fails on me again, I'll come back in and I'll play it again. And that's actually being, really, really true to that strategy. And the minute that you say that, hey, I'm not going to do it on this particular trade, but I'll do it on that particular trade, based on some sort of a bias, being that if the market feels weak and you don't feel like you want to long something, and so you choose not to take that particular trade, but your strategy was proving you to be right, and you failed to do it, it's still, it shows that you're not as dedicated to that strategy as you would like it to be. My strategy is simple. It's an 813 crossover. I'll delete everything here. And you know what? I don't have to delete it. Let's look at it on a bigger time frame, and it'll be a little bit cleaner. Okay. So I'm just using a bigger time frame to reference the moving averages, so that way you can see them on a bigger time frame. Okay. So the 8 EMA is the black one. The red EMA is the 13. And the red moving average is the 13 EMA. This black moving average is the 50 EMA, and there's a 200 SMA somewhere on this chart. It'll probably, yep, there it is. So 200 SMA. So those are the moving averages that I use on my strategy, and it's basically a very simple crossover or cross under strategy. So basically, when the moving averages, when they cross over, as in this part here, it's usually a long signal for me, and if they cross over, it's a short signal for me. And so it's a pretty simple strategy. I just make sure that they cross, and so it's either a cross up would be an 813 crossover, and or a cross down would be an 813 cross down, and so that'll give me a long and a short. And obviously, you can have a chart where it really doesn't give you any kind of range or anything, or you can have a chart where it does give you some kind of range, or you can have a chart where it gives you an insane amount of range. So sometimes obviously the strategy will pay off differently, and in those charts you look for continuation on the moves, and on sometimes when they don't give you as much, you make sure that you have that stop in place, because every single strategy out there will eventually fail you anyways. And it's at that point, it's obviously all about how much discipline you have to keep yourself in. Now, if you were following this 813 strategy from way back on this chart, even, this would have put you in all the way down here, even at the simple 813. And being that you're up, as the chart's working, maybe you get stopped out here because it did dip down underneath, and maybe you got back in here because the chart started to work. But there's a part where you really have to kind of use discretion on a chart. And if you're up quite a bit on a chart, a small 813 or pullback or cross down of the same strategy that got you in may not get you back out, because maybe you have so much buffer zone between these ranges here that you're not worried about these dips and the way that the moving average comes back under each other here or here or here, because you're all the way in from here. So in a time frame like this, for me, if I was ever to be lucky enough to catch myself in a trade that this long, obviously, I'd be working on a much bigger time frame anyways, and it would probably be switched over. And so this was the initial entry down here. It would probably be switched over to a weekly or a monthly 813 crossover, which would keep me in the chart much longer for the duration of the move, and I would still very much be so long on this chart. And so once you start off with a smaller time frame to get into, then you can open it up to a bigger time frame for continuation. So same thing applies for me with my day trades. If I don't trade in and out on every single 813 crossover or cross down. I would be aggressively trading one chart, in and out continuously for the entire day, and it's not the way that I trade. I usually like to take a position and try to get into a position for a bigger move. And so 813 on any time frame, Dan. It'll work as long as you switch over your time frames. You switch over your time frames, and the same moving averages are applied to every single thing. For me, I feel like if you're using the 813 on a 1 minute, it's got to be more of a scalp play, because your time frame that you're using to get into a trade usually reflects the amount of time that you want to be in that trade altogether. And so if you're using a 1 minute time frame, sometimes that little scalp might turn out to be a ridiculously good trade, and you might be in that trade for a very long time on the same just 1 minute moving average. Um, and so how come because I don't like using it. It's not my strategy. Um, I mean, I used to use it, but I switched from using that a while back now, and it's not my go-to, but it could be yours, right? As long as you can be disciplined enough to use it the way that you need to use it. So for me, on a time frame, as far as the strategy goes, if you're in on a smaller time frame, like a 1 minute, it's got to be something that's quicker. And so, say for example, you took a long on that 1 minute time frame. Sure, the next time it crossed down and you got stopped out, well, that was worth whatever that was worth, and then the short was worth only this much, and then that long was worth none, and then the short from thereafter was worth quite a bit. And so it could have even been continued all the way down to this way. But for me, I don't use 1 minute charts. I feel like a 1 minute trader is very much so a scalp trader, and it's not my type of charts or time frames that I like to play with. And so I kind of stay away from 1 minute time frames unless it's an IPO or a fallen knife or a parabolic move. Then I'll put it on a smaller time frame to try to kind of pinpoint that area. But other than that, I trade 5 minute time frames, and I'll open up if I'm in a trade and it's actually working for me, I'll open up my time frame to a bigger time frame, even to a 15-minute time frame during the day, to keep on a continuation on whichever move that I'm having. And so let's bring up JDST for example. So this was a chart that I've been in, and we continue to hold this chart today, and so we actually got stopped out on the chart right here when it started to pull back down. And it was a daily long, and a day trade from this morning pre-market that was called for the long. And for those of you guys that weren't here before when we were chatting before, the reason why I didn't take it personally, but I did alert it for my group, is because I was in here from a few days back. And so on this particular chart, if you follow me on Twitter, you know that I've been long from $17.55 on this day. And so I held it in, and then I overnighted again, and then I sold it today into that push. And so I actually got about 4 points or so on JDST, a little less than 4 points. But the strategy on this one would have kept you in long enough to see the chart actually, perform. And so an 813 crossover would have gotten you into the chart. It never fully crossed down, and you still had a moving average to support it. Now the collaboration with other moving averages that helps the one particular strategy that you're using to be a little bit more structural, right? So for me, I use the 813, but I also use bigger moving averages as my area for support. Like if I'm long on something, I tend to like to use a bigger area for support. So I'll use my 50 EMA, or I'll use that 200 SMA as a reason for support. So if I'm short on something, for example, gosh, I don't know. I think AAOI. Let's just look at AAOI. Okay, so if I was short on this chart here based on the strategy, the 813 crossed down, right? So I'd be short on AAOI into anywhere into this range, especially being under the 50 EMA. I would definitely be short on it. And so say I'm short on AAOI and the chart starts coming down and it curls back over to the upside. Now I would probably actually, if I have a remainder on it, because it's most likely that I took off money off this trade as it was working. And the most likelihood that I would have a stop over the 50 EMA. So the 50 EMA would be basically my it must hold type area, and I probably most likely would have gotten stopped out here because that's where my stop would be for the remainder. But there is an 813 crossover that could have also gotten me into a long setup if I was just playing a cross to another cross. And so one cross gets you in, the other cross gets you out. But I do use my moving averages as something to give me a continuation move. So if this was a smaller trade, for example, if the chart went from this way and started curling right away, then I wouldn't have buffer zone from here to here. But being that the chart would have pulled back from here to here, I would have a buffer zone enough to give the chart at least to the 50 EMA to give me a potential rejection at the 50 and a continuation to the downside. See, I don't like trying to play charts in and out, in and out. I prefer to get into a chart and try to see if it can give me a little bit more work or worth than me jumping in and out of it continuously. Yeah, I don't have VWAP on here. Nope, I don't have VWAP. I don't really use it for any part of my strategy turf, and the reason why is because I've switched it out with the 50 EMA, and so if you let's add it. Let's add VWAP and see what it looks like. Where's VWAP here? Let's make it let's make it this bluish color. Okay. So this is your VWAP here, the blue line. And I mean, like, you could use it as a strategy. I found that VWAP is a useful strategy if you're gonna use it robotically. But the reason why I switched out VWAP was because there was charts where it was just way too choppy sometimes in and out, and I couldn't handle that. And so I actually switched out the VWAP with this black line, which is the 50 EMA, that actually runs pretty close to it and follows a similar path, but with less chop. And I'm much more comfortable. If you notice the black line and the VWAP, right? But the black line's a lot smoother, and it plays very similar. So, but it's not as jumpy, and it keeps me a little bit more level-headed as the chart's working. But if you notice that it's very close, so it's not really it's just something that I used that I use now that replaces VWAP, but is very close to it. So I would say that I don't use VWAP anymore, but I have a moving average that's pretty close to it without the hop and drops and without the charts being very edgy. And I can't deal with edgy charts. Like I hate charts that move aggressively and pull back aggressively and chops around for a while. I hate charts like that. I much rather play a chart that's a lot cleaner and smoother, and having a smoother moving average rather than having a choppy VWAP all day. It's cleaner for me and easier for me to see it. And so VWAP has been replaced with 50 EMA. But if you notice that they're very close, so if you ever feel like you want to replace something, if you want to replace your VWAP, if you want to replace your VWAP with a moving average, you can definitely replace it with the 50 EMA, and it'll take the place pretty seamlessly, actually, like it did for me. It will take the place of VWAP seamlessly without you seeing much of a difference, and it'll definitely be a lot less choppier for you, Turf. So maybe you want to consider, testing that out. Just test it out and see how it works for you, because definitely it's all about finding something that works for you, right? Marty, if I was short on AAOI, like I actually mentioned in chat today, and I didn't, if I was short on AAOI at the 813 and seeing the breakdown of the 50 EMA, seeing the breakdown of the 200 SMA, yeah, I would have definitely added into it for sure. I would have definitely added into that position. Especially, the chart has nice range. That's a whole 2-point trade right there. And I definitely would have added into a position like that based on the fact that it's breaking down. And then if you look at AAOI, what would have really got you more interested is the fact that the chart is actually breaking yesterday's areas. And if you can see where the chart came back up to and then had hesitation there and came back under again, it was yesterday's lows. And so there would have definitely been some areas to add into the chart, either under the 200 SMA or even when it popped back to yesterday's lows and got rejected. So even an ad here, if you had missed the ad all the way down here, but the chart popped back to yesterday's lows, got rejected here, an ad here at say $47.65 could have still proved to be on an almost a 1 point ad there, and it would have actually turned out to be pretty cool. So there would have been definite areas for an ad on a chart like that, definitely. 50 EMA RSI. Yeah, let's go through it. I'll show you all my stuff here. So I have EMA 8, EMA 13, 50, 200 SMA. Why do I have 200 SMA? I don't know. It's ridiculous. Let's remove an indicator. Okay. So yep. So those are the moving average, and down here, volume, pretty simple. That one really doesn't have anything that you need to do, so I'll move it over. This is my MACD information. 1226. 13 is my smoothing. So I use 13 because I use a 813 and I felt like 13 gives me enough duration on my chart. And for my stochastics, I use slow stochastics, 14 length. I have no idea why 14, but anyways. And 80 and 20 I think comes with the default. So those are my stochastics. And it's like, as I always say, I don't think that a strategy is based on the strategy itself. I think the way that you trade your I could use stochastics fast if I wanted to, I guess, but for me this made the most sense. I've gotten the best results from it, and my uncle used to always tell me this: if it ain't broken, don't fix it. And so it's definitely not broken, so I'm definitely not gonna try to fix it. I used to play around a lot with different types of things, and then I come back to the same thing. I come back to the fact that, hey, this is paying my bills and this is working for me, and I'm gonna try to stick with it as long as I could. And so I've been trying to not. It's been a long while since I've actually moved anything as far as my strategy goes. It's been a long while since I've changed anything. I think the most recent thing that I've added was that 200 SMA, and I probably did that about 6 months ago. And that's the most recent thing that I've added to my charts or changed it. I've changed the colors, but as far as the details of the charts, they remain the same for as long as it's been a long while. And I'm now even at this point I'm always trying to find a way to make it better. Like I'm always trying to, like, I added the 200 SMA obviously not to make it more cluttery, but to try to make it better. And so I found like it does help, sometimes it gives me an area of support that maybe wasn't in the chart before, that I wasn't seeing. Sometimes it gives me an area of resistance that I wasn't seeing, and so it does help sometimes. And as long as it can help to make you $1, then it's helped enough, and it deserves to at least be on your chart. And so the 200 SMA is the most recent thing that I've added to the charts, and it's definitely helped. For me, what I think about when I think about strategies, I think about anything that you can use to help yourself be a better trader. A strategy does not have to be based on my strategies. It doesn't have to be based on anything. I can delete this entire thing, and you can formulate your own strategy based on anything. Let's remove everything from my chart. Okay, it's called a naked chart when there's nothing on it, just candlesticks. And so let's just add one indicator. And I like to show people the simplicity of sometimes how complex they make their trading lifestyle. And you'll see how simple that you can make your trading lifestyle. Okay, so this is just a 50 EMA, and I'll just apply it to the chart. Okay. Now, if you were to say my strategy is going to be based on the 50 EMA, that's it. No volume indicators, no RSI, no MACD, no stochastics, no Bollinger Bands, no ATRs, no anything, okay? Just the 50 EMA. You're going to say to yourself, I'm going to long over the 50 EMA and I'm going to be short under the 50 EMA. And you can see that it would prove to be a useful a strategy if you were robotic enough to follow it when you needed to. And so you'd be short under the 50 EMA. Would you be long? There would have to be criteria that would have to be met in order for you to take a position. May it be a candle that closes completely over and open completely over or under that moving average. That would have to be a criteria because you're not using volume here, right? So you would have to obviously know something else. And so you'd probably use something like a candlestick pattern to get you in there. And so a chart like this would, even if you took it long and the chart came back under, then you'd be short again, right? Because you'd be respecting your strategy, long over, short under. And so if you went through a whole bunch of charts, you would see that even that simple strategy would get you into a lot of interesting trades at the right time. And what you would have to do as a trader would just to be as robotic as you possibly could, meaning that if your chart's over a certain moving average for a reason, you're long on it. If it's under, you're short on it. So in a position like this, say you went long because your TSRO is over the moving average, then you would stay long. And even this little piece here may not get you out of your remainder on the long position because your entry would still be here. So say you take a position, my chart's over, for whatever reason I'm long at 138.75, chart pushes up here to 139.75, say I took off some at 140, that puts me right here from here to here, okay? And then I put my stop at my entry to try to keep into that chart as long as I can because I'm a continuation trader. I'm not the scalp trader that's going to get out my full position. So if I took a position here, whatever share size that is, then I'll sell half of it, or depends on the kind of move that I have. I'll sell 3/4 of it, and I'll keep some for the what if trade, for the continuation, for the this type of move. And so what I do is I'd instantly put my stops at entry and leave it there, and then I can work on another trade. So if I did take this at 138.75, based on the fact that I'm over my 50 EMA and I'm long, because that's my strategy, right? And so I'd take off some there at 140. Chart would keep pulling back, but I wouldn't get shaken out because I know that on the remaining shares that I have, it's still safe. The most that can happen is it can go back to my entry and stop me out for the remainder. But what could happen is that the chart can continue to move higher. And on a chart like this, the thing is that if you're actually playing this chart and you're actually long at 138.75, you sold some at 140, your stops are at entry. If the chart breaks over this peak here, it also gives you a reason to be adding into your trade. And so then you would have an entry here, you would have a first sell here, you would still be in, and then you can do an add at this point and still make money because the chart just broke over the new highs, giving you a completely new trade setup to deal with. And so on a simple chart like this, with just using the 50 EMA, it can prove to be a strategy that you would like to use. So where on this chart would you have been short on X? You would be short on X here. The chart's under the 50 EMA. You're getting it close to as possible as the 50 EMA as you could, and you'd end up being short. And where would you have been long? Well, the chart never gave you a reason to be long, so it would have been a short all day long with that simple strategy. The thing is that with any single strategy, how you decide to use it and how robotic you are and how mentally disciplined you are can obviously alter the essence of the strategy itself. Um, you can be in and out of trades, or you can see a bigger picture for a trade, right? Like for example, okay, the opening bell chart came under, so you shorted NVDA. Okay, fine. So for whatever reason, you got stopped back out. The chart's over, you went long. Now, in between these chops here, I don't think that it would be a reason to go long or short because the candles never really, continued either under or over. So maybe you just wasn't in a position at this particular time. Maybe a long position you got out of for whatever reason, and maybe you just don't have a position here. But then you're sitting around, and right here at 145, the chart started to break under. So then you went short on NVDA, and right into the close, you got a nice short, and the day's done. And so the strategy, any single strategy, no matter what strategy you use, and now we can change that this strategy, and let's make it let's make it an odd number, something that people's gonna say, wow, that's a crazy number. Who uses the 65-day exponential moving average? Well, here it is as a strategy. And why? Because any single thing can be a strategy. You have to understand that. Anything can be a strategy if you can be disciplined enough to use it as such. So you can use the 65-day moving average, okay? And then it applies the same way. If the chart's over it, you long it. If the chart's under it, you short it. So where would you be long on AUPH this morning? My chart's over my 65-day moving average, and I'm going to be long. And so you're long on AUPH for the entire day, and you caught the entire move without having to go short once on it because it never came under your moving average. Now, how disciplined would you be to actually see the fulfillment of a strategy? That's where it comes to the individual. Now, you have to understand that with every single trade comes a risk, of course, right? And when you take the position, or whichever strategy you're going to be using, when you take that position, you have to assume that risk. And as a trader, as a person in general, every decision that you take, that it comes with an outcome that may not be the outcome that you actually wanted, maybe a different outcome, maybe the wrong outcome. So then, what do you call that as a trader? Do you call that a failed trade? You call that a trade that didn't work for you. Because if you obeyed the rules of your strategy, for whatever rules that may have been, if you obey them to the best of your ability and they fail to produce an outcome that's profitable for you, then I feel like it's not your strategy that failed you, it's just a setup that didn't work. Some people react really, really negatively to a trade setup or a chart setup that fails them. And it takes away so much from them emotionally that they're now putting so much different types of emotions into their strategy at the same time. It's no longer just a robotic moving average strategy. It's a robotic moving average strategy now with a little bit of fear and a little bit of doubt and a little bit of worry and concern, and oh, that last one didn't work for me, this one may not work for me. And so now when if you're trying to be robotic as you possibly could, and you obey that whatever strategy that you're trying to work with, if you can obey it to the utmost, and if you can say yes I will, and if you can only short something, if you could only long something, say you can only long something, and then your strategy is under this 65-day moving average, by the way, and I'm giving you a weird number. Why am I giving you a weird number? Why can I make this any single number? Because I'm trying to really show you how much of any single, that's a 72-day moving average, by the way. Any single moving average can be a strategy. It is not the 200 is your golden strategy. It's not your 50 that's your golden strategy. It's not your 21-day moving average that's your golden strategy. The golden strategy, the key to being having a mastered strategy is not the strategy itself. It's the person behind it. And the faster that you can realize this as a trader, the faster that you can grasp the fact that it has nothing to do with the charts, but everything to do with you, the better off you're going to end up being as a trader. So now this is the 72-day moving average. Now if the same strategy applies in your short under and long under, short under and long over, would you have made money on this 72-day moving average on this chart? And it would work for any single chart that you can find. IRBT, it's over my 72-day moving average. I'm going to take it long. Why? Am I looking at a volume bar? No. Am I looking at an indicator? No. Am I looking at an RSI, a MACD, stochastics, Bollinger Bands? Am I looking at Twitter? Am I looking at news feeds? Am I looking at my scanners? No. Why am I taking the trade? It's simply because it's over my moving average, my 72-day moving average, by the way. NTES. Why am I taking NTES short? Do I like the company? Do I like the news? Do I anything? Why am I taking this short? Simply because it's under my 72-day moving average, and that's my strategy. And what a short it would have been. And so this applies to any single chart. And it really does not matter which chart you're looking at. By the way, this 72-day moving average is actually pinning some serious areas of support and resistances. You see how it came in here and held this on TSRO? You saw what it just did on AAOI? Look at that. This 72-day moving average is actually pretty cool, by the way. You should write that down. I may go into that a little bit and more into detail. I'm actually writing that down, seriously, because I want to actually see how many charts that thing can actually fall into. When you come across little crazy things like that and you're not taking notes of it, you really should, because it's an odd moving average, a number that nobody would use. But isn't it weird that it keeps printing? It keeps printing. Look at where it's pinning. I mean, give me charts. I want to just take a look. Look at this one. It keeps printing some serious numbers. Okay, EMG didn't have any movement. JDSD, look. Right here, right here, right here. I mean, it is seriously catching some areas almost to the penny. Let's take a look at how many charts we can see like this. It's very interesting. Sometimes you might find something that you had no idea it ever existed. Like, would you ever have thought about typing in the 72-day moving average? Of course not. But you might find something that'll just suddenly start making a lot of sense to you, and then you gotta give it a little bit more. You gotta give it a little bit more a little bit closer look after something like that. We may have stumbled onto something here. But either way, I'll definitely be going over this a lot more. This this whatever moving average this is, because this is actually pinning, for whatever reason, it's actually pinning a lot of charts as I go across random names here. It's actually pinning a lot of charts. What is that chart? AKTX. That was a former. Oh wow, look. I mean, it's really seriously pinning some errors on these charts. So we may have just stumbled onto something, by the way. So it's pretty interesting. But either way, try X. Well, X would have just given you one short. Period. It would have just given you one short period. Yeah, it's let's take a look. I know it got interesting there. It's a 72 EMA. Yeah, that's crazy. My new strategy, the 72 EMA. Try saying that a few times quickly. Either way, though, the gist of what I'm trying to say by throwing across any moving average, okay, is that it really has nothing to do with the moving average, okay? Everybody's searching for that holy grail. Everybody wants that trader on there that everybody wants that trader on Twitter that they can follow. That, hey, how many winnings do you have? How many ratios? What's your winning percentage? What's the strategy that you're using? And then they see it and they go, oh my gosh, it's the best strategy in the world because you're constantly making money off of it. But it's not the strategy. It never was the strategy. It'll never ever be the strategy. It's the person behind it, the person that's taking the chart. If I'm long something, I'm long it for a reason. If I'm short it, I'm short it for a reason. And if you can find yourself in a position where you are actually robotic about doing it, it won't fail you. And you caught yourself, you catch yourself sometimes in a position where you're long something, and for whatever reason, say you were long on X and it's a day trade for you. By the way, I'm swinging X. And my average is, I don't have an average. I have one buy that I bought it today, but it's at 23.75, which is kind of higher from where it's at. But I'm swinging it, so I'm not worried about picking it up lower or whatever. Um, if I was day trading this, and I mentioned this to my group today, if I was day trading this, I would have been out for so many reasons on this chart, a long, long time ago. I can't leave it on X. It seems like there's a 90% blank space up here, and that's pretty boring to look at. Let's leave it on AUPH. I know that a lot of you guys are overnighting some of this AUPH, so leave it on AUPH. By the way, your 72-day moving average would have got you one hell of a trade on AUPH. It's never about your moving average, okay? And that's just a moving average strategy. What about all the other strategies that apply to trading? Okay, how many other strategies apply? Now I can go through 1,000 moving average strategies and get you one. I can get you one for every single person out there. I can find you one. I can find you 1 to 100 on EMAs, 1 to 100 on SMAs, triangular moving averages, whatever, okay? So you have to be able to see that this can be any moving average, okay? And I also I like to mess around with different moving averages and different so let's change it to a triangular moving average. And what I like about the triangular moving average, if you guys have never used it or never seen it used, it's so smooth. It's super super smooth, and it's a beautiful type of a curl. It's way smoother than the simple moving averages. It's a very very smooth moving average. It doesn't capture a lot of aggressive moves. I would prefer to use it so much more for bigger charts, because it's a very smooth type of a plane. Um, but yes, I will, Tom. I will definitely put it. And I definitely think that the triangular moving average is something that you should just take a peek at because it's pretty interesting. So anyways, let's leave it back to a 72-day moving average, exponential moving average. Okay. And so that's just moving averages. I mean, this can take all night. If you get me talking, I can talk for days about trading stuff. But let's add another indicator here and let's see what you can use. So let's say you're using, okay, let's just go full stochastics. I'm just gonna load the default stuff because there's no way for me to fine tune this right now. Lines with bands, lines with shadings. Okay. So every time your moving average, your full stochastics goes hot, you short it. Every time your full stochastics goes cold, oversold, you long it. Okay. So you would have a period here where you would be long and the chart would work for you. You'd have a period here where you would be short and the chart would aggressively, quickly work for you. You would have a point here where your chart would be short, and you'd be short, and you wouldn't have gotten stopped up because the chart really just plateaued for a while, and your short would have actually worked. And so that's just a full stochastics. Okay, so again, we can do this with any single chart, and this one. So the chart's oversold, you'd be long. the chart's overbought. Now there's a point here where you would actually be exiting your long position based on the overbought condition, and then you'd be short, right? Because it's overbought now. This is 5 minute, only on 5 minute. And so you can see how if you were robotically using this strategy, just the full stochastics, and these are all default settings, I haven't even played with it, that you can find yourself a strategy. Couldn't you say that I want to be long or short based on some of these criterias? And so you would say that, yeah, I can be long here and I would get a move, right? And then I never got short, but I had to exit my long. And then I would be long here because it's oversold again. I never got short because it was never overbought. And then I ended up getting long, and I hung out with it, or stopped out, or came back in, and then I ended up making money on it again. And so this is something that you can use as a particular strategy also. So look at JDST. So it was overbought, and I shorted it. Why? Because that's my strategy and I'm robotic, right? So I'm short and it pulls. It pulls all the way deep and it goes oversold. And I long it. And I make a nice long. And then it comes into the overbought condition and I short it. And then I had a wicked short. And then it came to the oversold condition and I bought it. And then I made a little bit of money into close. And so again, it's pretty much any single thing that you want to use as a strategy, you could do that. So remove that again. And then we'll add something else. So I like using, somebody brought up Bollinger Bands, so let's just bring up Bollinger Bands. Again, these are factory default settings. So usually on Bollinger Bands, when it pokes through the top side, you want to be on the reverse end, right? So you short it if it pokes through the upper cloud. And so I shorted over the high, longed it at the bottom of my band, shorted at the high of the band. And so, you know, you would have areas on even if you were just using Bollinger Bands that you could use as a strategy, right? How robotic would you be though? That's the question. That's the real question. It doesn't matter which moving average you use, okay? Which thing you do as the reasoning for taking the trades. It really just has to do with the individual. I mean that's okay. So those are a few indicators, okay, and then we did a few moving averages. What about even simple technical candle patterns? What about time of the day? What about formations, triangles, double tops, breakouts, flags, double bottoms, that sort of stuff? And so that there are so many numerous types of strategies out there. So what's the best one? There isn't a best one. That's the answer. There isn't a best strategy out there. The best strategy, it's inside of you. How you can go about deciphering which is my trade and which isn't my trade, why I'm taking that trade and why I'm not taking that trade. That's the best strategy. Now all you have to do is find a chart that you can apply that to. And so bottom line is everything that you want to do as a trader, it needs to come from you, from inside. Every strategy that you want to apply to your charts, every moving average that you want to see, everything that you want to be long for or short for, news based, fundamentally based, whatever, you have to be strong with it. You have to be convinced, you have to have conviction, and you have to go with it. And without risk, you won't be able to make that happen. So with trading, it's all about taking a risk, and you gotta put that risk on in order to get that trade to work, or you can see that thing work for the entire day. Yeah, right here, 5 minute time frame, 1 day, and it'll say it right here too, 5 minute there. So yeah, it really comes down to you and your trading. And so now shoot some questions. So we'll leave the 72-day moving average on here for fun, which I'm seriously gonna look into that a little bit more. It's definitely something that I'm very interested in now. It's pretty cool. Alright, so I'll take some questions. Yep. Any questions? I hope some of that was helpful though, because I'm really not trying to to show you a particular strategies, a particular single strategy, because there isn't a best particular strategy, and that's what I'm trying to prove. There isn't a best one. The 200 SMA, the 50 EMA, the best plays in the world, the best traders in the world. There isn't a specific one. The best traders in the world are that way, not because of the strategy that they use, but because of the mindset that they have going into the game. Can I go over my morning trades? Gosh, okay, I did Twitter this morning, pre-market, 16 long. I did Twitter pre-market on the pullback here to 16. It was actually it was a pullback on a trend line reversal. Anyways, I did Twitter long at 16. It's gonna be long for me to go over all of that. I did STX 2 times today. First time bounce at 44. Yeah, at the right at the open. Okay, eventually I'll get a chart here to load, and we'll be able to get this right up. Really? No chart on STX? Oh, here we go. Okay, that was a nice bounce right at 44. I actually caught a nice bottom at 44, and I made 50 cents on the first 5-minute candle, and it bounced. And then since I'm on this chart, I'll show you again. I did another bounce on STX at $41.85, which was actually right here. And this is what's called, for me, this is one of my strategies also. It's a time trade reversal. And right at 10:30, I took the trade. It was at $41.85 when I took it. And it actually paid off really nice, because we went all the way over 43. And so 41.85, 42.85, and you can see that it was over a 1-point bounce. And then I ended up getting out of it. I never touched it again. I took HTGM this morning. I tried to play it for a bigger aggressive move right out of the gate. The chart had an aggressive spike. It pulled back, and I bought it at 45. I'm still holding it at 545. UVXY, I did it twice today. I had a nice bounce on it. First one was here at $14.33. That's what I had it at, $14.33, and I made not a lot on it at all. And then it pulled back and stopped me out at my entry, which is usually what I do with my remainder of my trade. $14.33 was my stop, and then 2 minutes later this happened, and so I missed out on that entire move there. I sold my JDST, which I was keeping for a couple days, and so that ended up being my big winner for the day. I also played Nugget at 8.05 on the long side, and yeah, so then I got stopped out on Nugget for 5 cents, and only to see it rip afterwards, which was just really just saddening. So those were the trades that I took today. I didn't take a lot of trades today. So those were the oh no, I took ESPR, and it failed on me. Chart failed. I bought ESPR at $37.25. The chart was breaking out. It was actually flagging, making a higher low. Chart was sitting in a nice range, and I felt like it was gonna move to the upside, and I took it at $37.25. I think was right into one of these candles here, and it failed, completely failed on me. So I held it all the way till here. No, I'm kidding. I cut it where I needed to cut it when it broke the trend to the upside. Okay. So now I can go over some of the questions. Thoughts on using one time frame for entry and another for exit? No, I can't do that. I mean, See, I usually gap up my time frames, right? Like if I'm in a trade, say I'm in a long position. Let's do JDST since that was the most evident one. At this point, my time frame's over 15-minute time frames, and obviously I would have to use my strategy, and that would keep me into the trade a lot longer because my 813 never actually crossed, and so I kind of go up on my time frame if I'm in a trade for a longer duration. So you're thinking now if you're into something and to exit it you want to smallen up your time frame, Tamer? Or are we talking widening it up to see a bigger perspective, a bigger move, or are you talking about tightening it up to exit closer? So while you answer that, Tamer, I can go over. Do you normally put your stops at entry so you can give yourself a paycheck first? Yes, I normally once my but what if that early entry? All right, let's take for example you were in JDST. Say you bought a pre-market. Hypothetically, you bought a pre-market. You were on a 5-minute time frame to get into the trade, and you bought a pre-market off of this time frame, right? Say for whatever reason, you were using a smaller time frame into that range. Say even a 2-minute time frame. There's numerous parts of this trade where you would have exit, right? You would have said, oh, thank goodness I got out of JDST here, only to see it go a full point further. So at this point, I think once you're in the trade, it's much better, I think, to open it up to try to get continuation moves rather than to shut it down and try to exit quicker. I think if you want to enter into a trade, maybe you enter into that smaller time frame. Maybe use that 2 minutes to get you into a trade. Maybe use a 3-minute time frame to get you into a trade. And then you can use a wider time frame to keep you into it longer. So maybe if you don't want to use the 5 minute to get in, maybe you can enter a little bit closer. Because remember, every time frame that you can get in closer. You can get in with the 1 minute or whatever, but you're really gonna have to be on top of it. What I'm saying is, I don't think you'd be able to switch the charts around so quickly to adjust to your eyes seeing the movement. If you had how I have, right? I have the 5 minute on my main screen, and then I have another completely other screen with the 30, the daily, and the monthly time frame. So say you had it on a 1 minute here, and then maybe on a couple other frames you had it with the other moving averages, with the other time frame, and they were all linked, of course. I feel like there would be an easier way for you to see it quicker. So it's all about seeing it quicker. Because the second that you, especially when you're using a smaller time frame, the second you move your eyes off of that 1 minute time frame and it yanks just a little bit, you're shaking out because it's a 1 minute time frame, right? 1 minute time frames looks very scary when you're looking at a chart, because you can see a move like this. If you saw this on a 1 minute time frame, that may have looked like death. I mean, like that probably just looked like it got shredded on a 1 minute time frame. Look at that. Bang, bang, bang. JDST is dead, right? And I'm on a 15-minute time frame saying, "Oh, that was an aggressive pullback," but I'm not out, right? Because I'm on a 15, and so it would get you a good entry, but you gotta have some other time frame to relay that information quickly. Not by you changing the time frame itself, because you still need to see what your 1 minute's doing while you're referring to something else on a bigger time frame. So if you understand what I'm saying, Tamer, I feel like you still have to see both of them at the same time. So I hope that helps. Do I normally put my stop at entry? I give my paycheck, myself a paycheck first. My job in this business, in this world that we call trading, is to take a paycheck. My job is to extract money from the market. At my first chance of extracting money from the market, that's what I do. Usually in increments of 25 cents to 50 cents. Depends on the type of charts that you're playing. If I'm playing a pig chart, it'll be 25 cents minimum. And if I'm playing a bigger range chart, sometimes it'll be 50 cents to $1, whatever. But my paycheck is my first priority. So say I do 1,000 shares, 500 shares is coming home with me right away as soon as I could, and then the remainder of that goes into a stop at entry for a continuation trade. If I get the continuation trade and the chart breaks over a particular pivot area, I'll add size into it then. So say I started off with, okay, so say let's take JDSC for example, and so let's do arrows. So say I went long JDSC there, and my first paycheck was here. My stops were at my entry, and okay, so maybe I got stopped out on it. Okay, so that might be a bad example because I actually called it a lot lower. Okay, for the conversation sake, I'm gonna change where I entered this trade. Okay, because it's easy when you're just playing with arrows like that. Say I got into the trade here pre-market, and I sold some here into the pop. So I had 1,000 shares. Okay, just doing conversation's sake. Okay. I had 1,000 shares of JDSC here. It came up here. I sold 500 shares, so now I only have 500 shares. So my stops are at that area here. And so the chart kept me in long enough, obviously. The chart broke over a pivot point at this range, pulled back into it. When it broke back over the second time, I probably added back into the trade. So maybe I added back my 500 shares. Or maybe I proceeded to add size into the trade at that point to try to really make some money. Because remember, my 500 shares from here is still intact. So this is my job here. It's the most important part of my day. Paycheck. This here, whatever comes afterwards, the chart could go to $100 afterwards. It doesn't matter. On the way to that level, we'll figure out where we're gonna add or whatever. But this arrow here is the most important part of your job. This is the only way that you can continue your account. This is the only way that you can trade tomorrow. So this is the most important thing for me, my paycheck. And so it happens with any single chart that I take. Even when it was with STX this morning, I caught a nice bounce off of $44. The chart actually had a really aggressive bounce. It may not look like that much, but that chart actually bounced almost a full point. And so I did 44.50 was my paycheck. Stops at 44.25, and the chart whipped right through it, stopped me out. I did the bounce again at $41.85, which actually worked out to be almost the bottom. And I got my paycheck on this one a lot later. The reason why is because at 10:30 I usually go get my daughter, and so I never got to take off the money right away. I came back and my paycheck was actually worth a full dollar on this one, and so my daughter actually made me some money today on this chart because I didn't get to take off that 25 cents. I just kind of let it ride, and so I ended up getting a full dollar on my paycheck, which was extremely a lot. But once the paycheck's done, I didn't do stops at entry because I had too much buffer zone here, right? It would make no sense for me to give away a full dollar. And so I moved stops up into the money, and the chart started to pull back, and I got stopped out there. And so that was STX. But yeah, so first priority is paycheck. It's the only way that I can continue doing this as a job. I have to pay myself. Once I've paid myself, I cannot pay my employer back. And so that's why my stops at least has to be at the entry for the remainder of it. Basically, the strategies used are common ones, yes. But since there isn't a best one, you just have to run through different ones to see where the candles are hitting it. Not necessarily. You have to run through different ones that you're comfortable with, Eric. I think the best strategy is the one that you're comfortable with. So whatever you want to use that 72 EMA from now on as your strategy, and you want to robotically use it for the rest of your trading career and master it, you can be the best trader out there, and the 72 EMA can be Eric's strategy for the rest of your life, and you can go on to be a famous trader and write a book about your 72 EMA and all of that. But it has to come with discipline. It has to come with discipline. There's nothing going to take you from being if I see we're still in the 72, right? I think. Okay, which was okay, say AUPH. Now here's the difference, okay? This is my strategy. This is your strategy. Morning chart opened and you didn't take AUPH. because you just didn't like the chart. But I took AUPH because it's over my strategy, right? Over my 72 EMA, I took it long. You didn't. You hesitated to take it. You didn't take it for the rest of the day because you just didn't feel okay with playing the chart. But I stuck to it because the chart was still over my 72 EMA. You understand what I'm saying? So the difference there wasn't the chart. The difference wasn't the chart. The difference wasn't the moving average. The difference wasn't the time of the day. Difference was nothing but you and me, and you and I. And so it was just an individual type of a difference. You understand what I'm saying there, Eric? That it really has to come down to the individual. How much can you really say that, yes, I'm dedicated to using that particular strategy? And so there isn't a best one. And I don't think that you need to run through a lot of them. I just think that you need to find something that you can use. That's the 72. I mean, like as I said before, I can change that to any single moving average, and it can be any single moving average out there. So it really doesn't matter. You don't need to run through all of them. I just found that being odd that we picked up that number. I mean, give me a random number here. It'll be a 40-day moving average. How about we make it a little bit more odd and we do a 47-day moving average. 47 EMA. And there it is. That's your strategy. That's it. It could be anything. You pick one. It really doesn't, it depends on you as an individual. How robotic are you to it? Okay, so that's your 47-day moving average. I'm long over, short under. I'm long over, short under. Does it really matter? I'm long over, short under. That's it. That's your strategy. Now that can be any single chart. I'm long over, I'm short under. And that's it. Right? So it's not really necessarily how which ones come into play. It really doesn't matter. It really depends on you as an individual. What's the best advice for college traders looking to eventually do this for a full-time job? Stay in school so you make sure that you have a backup. It'll be the hardest thing that you ever do. Way harder than any college classes you're studying for. I think I've put more hours into this than if I was studying for a doctorate or something. Save up some money, because the smarter you get, the more you're gonna think you can make this an easy transition, and it'll be the worst mental mistake of your life. The hardest thing to do is to transition from being the smartest person at your work, at your job, at your school, to being the sorry to say, but not so smartest person as a day trader. I think the people that I've seen sometimes have the hardest issue with day trading are accountants, because they just can't figure out why the numbers don't add up. They just can't. Why is this moving? Isn't it is not supposed to do that, but it is. And so I've worked with accountants. I've talked to them back and forth on emails, and it just doesn't, the numbers don't add up for them, and it's because they're so good at what they do. And so the smarter you get, and you think that this is an easy transition, you can take all the economics class that you want. You can understand all the fundamentals of everything. You can read Qs, and you can understand earnings reports, and you can do that way better than I could. And you would still have the most difficult time doing this if your mind isn't prepared for it. So the best way that I would say if you're eventually looking to do this for full time, is when you do decide that this is something that you want to do for full time, try to remain open-minded. Remain open-minded. Don't think that you're coming in, top of your class or anything, and this should be a simple thing to pick up. It's not. Trading with your own money an effect on your mind and your character that you would never have seen before. It would unveil a lot of things for you that you never even knew that was there underneath you, inside of you somewhere, and it'll break you down. It'll crush you. It's real money. When you lose it, it's a sickening thing, and it will crush you before it brings you up. And so, for you, full time college student that wants to eventually do this for a job, I would say save up enough money, practice quite a bit, do a lot of reading, do a lot of understanding of what you're getting yourself into. And when you do decide that you do want to do this, you use half of the money that you initially thought you wanted to use. So that when you actually finish losing that first half and you think that you actually got this, you'll still have money to continue and trade again. So save half. That's my best advice to anybody looking to start trading. Save half. So that when you finally lose that first half, you'll still have money to come back in. Do I lose? I use a lot of scanners. A lot of scanners. Oh my gosh, how did you know about Twitter? Earnings? If you're a day trader and you didn't know about Twitter earnings this morning, that's not cool. You got to be on top of it. I use two services. I use trade on the website. You'll be able to see the links that I have for both of the things there that I use. I use Trade Exchange for my news feed, and I use Trade Ideas for my intraday volume scanners. And those are the two things that I use there, Eric. But yeah, you gotta have yourself a feed to provide you with some kind of information. And I gotta tell you, Twitter's a great resource if you can't even afford a news feed. Twitter's a great resource to get really quick, up-to-date news. It's just the people that you follow. Get rid of everybody else that talk about everything else that's crazy in life, and you don't need that. And if you have a Twitter account that's maybe family based and friend based, just get another Twitter account that's purely trade-in based, and follow the people that you need to follow. Follow the right people, the people that brings you news and market events, and you would be surprised how quick you can get news on Twitter. All right, if you but use it for that. Don't use it for your, hey, let's get a good trade ideas going on here. Let's pump this or let's do that. Don't use it for that crap. Don't use it for people that negative vibes and trollers and haters. Don't use it for that. But there's a lot of value that you can find using Twitter, and if you are looking for a quick news feed that's perfectly free, you can follow the right people on Twitter. You'll be able to get a lot of news from there. So you don't have to pay for an expensive news feed. You can get good stuff on Twitter, and it's free. Just follow the right people. I post out every single day. I post out what's the daily news events for the day. Every single day I post that out. Every day I post out what's the earnings report on the tickers for that afternoon. I post out what's gapping up in the morning, and I also post up what's gapping down in the morning. And so those four things alone can help you a lot. And obviously, I put out a lot of small trades sometimes during the day, at least if something's moving or something. If I'm quick enough to it, I'll post it out there if I could. You say that you usually swing. What percent do you give yourself if it goes against you? It depends really on. You see, that's the thing. It's totally based on the chart. So let's do daily chart because that's the only thing we're talking about for a swing trade. And let's do 3 months out. And I'll give you my swing trade right now. I'm in rare, RARE, at $61.50, and the chart's at $65.68. It came up to the pivot test today, and if we can break over that pivot test and hold for a support, I want to add more into that chart tomorrow. I'm looking for a $75 target on this chart, and so I sold some yesterday into this big strong candle. And so that's my paycheck on this chart. But I was in from $61.50. I was giving it a point and a half. Reason why is because I know that I want a bigger move to the upside, so I'm giving it a little bit more. A point and a half on rare. I'm also in this one, PLSE. The first day that it came down to the 200 SMA, I bought it on the first day that it came down, so I'm long on PLSE at, gosh, what's my, I forget my number now. I have it written down. $18.10. $18.10 is my entry on PLSE, and I gotta tell you that it was only a 1 point stop, and the chart never stopped me out, and I ended up staying in, and I'm still in. I sold half of it at $24, and I'm still in here. And so on PLSE, I want to see if it consolidates right here into this range, and if it stays above the obvious, limited uptrend that it's holding right now. And as long as it can stay above this little uptrend that it's holding, I'm gonna keep it. But this is one, and I'm in Ren. This one I only picked up 2 days ago or yesterday or something. $38.44. So I just got into this trade, and I'm basically playing an uptrend on this chart here. I want to try to see if the chart can hold this uptrend. So I'm long versus this uptrend, and so if the uptrend basically fails, if the chart breaks, then I'm gonna be out. But you're asking me what's the percentage, right? So I don't do percentages. I do where the charts need to hold. Say for instance, this I needed to put a stop all the way down here. Well, that's where my stop would be if I needed it to be. It wouldn't be based on a percentage. What would change is my position size. So for right now, I'm not actually risking a lot, because my entire position is based right here, right in the middle of this congestion zone. If the chart was to break here, anywhere under this $37.88, I have no reason to be in it anymore. So being that I picked it up at $38.44, I actually have a bigger size on Ren because my risk is a lot less. But if I had to risk all the way down to here, for whatever reason, if I had to risk all the way down to here, say I wanted it here and I'm risking whatever the price is. So say I bought 1,000 shares at this point. Why? Because my risk is smaller. But if I had to risk down to here, maybe I would only start with 200 shares because I still have to risk that amount. So in it's all about position sizing. I risk based on what I have to I position my trade based on what I have to risk, not so much what percentage it works out to. For me, I didn't start working with a lot of percentages type things, and so I kind of stick to where do I need to stop out? Where do I need to be, not in this trade anymore? Where have it been invalidated? And that's where my stops are at. And that's where that's how I position the trades. If that helps you, Andy. So I don't do percentages. I do kind of, I look at where it's at. I look at where I need to go. If I gotta risk 2 points, then I gotta be smaller in size, right? If I only gotta risk 20 cents, then I can put size on that position. So it all depends. Show the time frame for earlier entry. Oh yeah, timer. So what else do we have? I mean, I know you guys had quite a bit of questions here. What the average position size do I buy on average? How many shares? Depends on the chart. If it's depends on the chart, depends on the risk. $200-300 chart, my maximum would be about 500 shares. If it's smaller charts, pig charts, depends on how they're moving. If they're aggressive, I'll go up to a maximum about 15,000 shares if I need to. Depends on again, the range. As far as X, the gap fill is what I was looking at on the daily, and so there's a gap fill all the way down to here on X, and that puts you right down into that $20.50. What I also like about it, not just the gap fill, but there are pinpoint reasons to it. It's a pin bar candle. This is a reversal one. pin bar candle, pin bar candle. So I have a good feeling that maybe the chart wants to get down there. That is a strong line of support, a strong line, and so that is also the gap fill, and so maybe the chart gets down there. That's what I'm feeling there, Chris Santana. So hopefully you'll be able to see that. Let's see the 50 EMA 5-minute chart. Would use my exit just standard run through movements. Depends. Good job. Yeah, get a great job and make tons of money and swing on the side. I like that, Marty. I like that. There we go, Tamara. Got a PhD in engineering, and this job is still kicking his ass. You use earnings whisper, okay. No problem, Marcus. Thanks for coming by. Thank you guys for being here. Yeah, so let's wrap this up. For those of you guys that found this helpful, definitely retweet or obviously you saw me on Twitter. That's how you got in here. So, shout me out, and we'll definitely do this more often if I have more requests to do webinars. If you have any questions, you don't have to be in with me at ITA to be, to talk to me. You can talk to me whenever you need to. But if you are interested in trading with me at ITA, please do, visit us at, let's get that website up. And definitely, give us a visit there. And if you like, obviously, what you've seen today, and if you want to give us a shot, we have shorter periods of signing up with us if you want to. But that's not what I'm here for. I'm here to try to educate people, so I'm not here to sell anything. But anyways, thank you guys for coming, and definitely I would love to hear more from you guys. There's a lot of new names on here anyways, a lot of people that I don't know, and I would definitely like to get to know you better as a trader. And again, any questions, you can email me. Here's my email. It's probably on that website too, but here it is. And you could always email me if you have any trading related questions. And for my guys that are here, I'll see you guys in the morning. Have a good night, guys. Take care.